I'll start off with the topic that what is listing. Listing basically is the process whereby a company offers equity or debt to the public through Pakistan Stock Exchange Limited. Being the only stock exchange of the country, this is the only platform with which you can raise capital, through which you can raise capital actually. And obviously, with all listings, there is a regulatory framework in place. Whatever public offering is made under the Public Offering Regulations 2006, governed by SCCP, and the chapter in PSX rule book is chapter 5, for which deals with listing. And the company, whoever is going for a public offer, is required to fulfill all the requirements given in the regulations. And once they have met all the regulatory requirements, we list these companies and they start trading. Now we have two boards with us. One is the main board, which is for the well-established and large cap companies, and the other is the GEM board, which is for the upcoming companies, medium companies, and startups. Now, what is an IPO? I'm sure all of you, it's an educated audience, so I don't need to delve into that too much. But just for brevity, IPO is a process where a company issues a stake of its ownership to the public for the first time. And it is one of the modes of fundraising, obviously, through capital markets. And common type of securities offered through IPO are number one, equity securities, which are ordinary shares, and then there are preference shares, and then debt securities, which include TFCs, sukuks, commercial papers, and convertible bonds. So there are two types of public IPOs you can go into, equity as well as debt. Now, we moving on, I'll come on to the listing requirements, the for the main board and the GEM board. For the main board, the target companies, as I've told you earlier, are large cap companies, established companies, and greenfield projects, obviously, but that has to be supported by a established group. And for GEM board, it's startups, small and medium-sized businesses, high growth initiatives, greenfield projects. So the paid up capital excuse me, requirement for the main board is 200 million, and for the GEM board is 25 million. There is no upper cap on both the boards, so you can raise funds as to the tune of whatever is desired. Actually, you can go up to a billion, 2 billion, 3 billion. Interestingly, the highest IPO that has taken place at PSX was 5 billion, and we have done smaller fundraisers as well. So that is something you can look at. And then there are free float requirements for the main board. Company starts from 5% and that goes up to 25%. And for the GEM board, it's minimum 10%. And then there are the number of shareholders. For the main board, the number of shareholders has to be 500, whereas for the GEM board, there can be 10 initial subscribers. Obviously, board approval is required for any company to go for listing, whether it's coming on the main board or the GEM board. And there is an audit requirement because you'll be soliciting funds from the public. So yes, you have to have audit accounts for the last 2 years for both the boards. And document type, what document type means is that which document goes to whom. There's a huge difference between the GEM board and the main board because the main board is open for the public. All investors can participate. Whereas for the GEM board, only accredited investors or high net worth individuals are allowed to participate. So the prospectus is a document which contains all the information that a company is supposed to give while soliciting funds from the public. Obviously, it has a lot of sections in it. There's a whole schedule given in the Public Offering Regulations 2017, and the company has to fill in the. It's basically storytelling. If you ask me, okay, why is the fund needed? What is the capital structure requirement? How are you going to use the proceeds of these funds? And all, so on and so forth. And it's a pretty long document, a very comprehensive document. The model that is, although PSX and SCCP do give approval for the prospectus, but the model that we follow is basically buyer beware. So it's mostly disclosure based. Everything has to be disclosed in the prospectus. And our timelines, I can tell you one thing is are very squeezed. We have to process an IPO in 29 working days. That's unprecedented. Nowhere in the world is a prospectus and IPO processed in 29 working days. That has been implemented since 2023, November 2023. And since then, we have had around 8 IPOs, and most of them have been done within these regulatory timelines. Whereas for the GEM board, there are no timelines. However, we still try to sort of get it processed in the minimum possible time. And compliance, as far as compliance is concerned, for the main board, there has to be full compliance with corporate governance code of corporate governance. Whereas for the GEM board, three requirements are mandatory. Number one is you have to have an audit committee, you have to have independent directors, and then there has to be a female director on the board. Other than that, all the other requirements are relaxed, and GEM board companies have to comply with them within 2 years from the date of their listing. So these are a few things that are their requirements for the main and the GEM board. Now, why would a company, it's very difficult to sell an IPO. Why would a company want to go public? What benefits are there for a company? The first question always asked is, you know, uh, exactly why should we go public? I mean, what's the benefit in it? Why is there any tax benefit? And that's a very difficult question to answer. And I'd have to tell them, no, you don't have any tax benefits. But there are other potential benefits that you can use or make use of when you're going public. It's number one is business continuity and succession planning. See, perpetuity will be ensured once you get listed because some businesses are generational. I mean, the first generation is there, the second generation is there, the third generation may not want to continue with the same business. But with listing, you will have a proper management and a proper board which can continue, which can ensure continuity of the business and a perpetuity of it. And then again, once you're listed, your access to capital becomes unlimited. You can access capital anytime, you can raise funds anytime you want. You have your right issues, you have other than right issues, you can, issue debt securities, and you can, do a secondary IPO. I mean, the access to capital will become unlimited. And then there's value creation when you get listed. If nobody's asking you to give out 100% of your shareholding, the maximum free float required is 25%. And that means that the controlling interest remains with the company. It does not mean that, you give out the total control of the company to other people. And within that, free float, you can maximize your shareholders' wealth, and that will help in value creation. And then again, you'll have improved relationship with the bankers and the suppliers. And this because whenever a company is listed, the compliance and the transparency that becomes a important factor for banks and other suppliers to decide whether to do business with you or not. So that is one thing. And obviously, benefit for the economy in the long run, there is benefit for the economy. People can, channelize savings of the public and promote economic development. Investors can always, and invest in companies and make money. And then there is the public profile. Obviously, the visibility will become really high because the listed company can always will be, more reliable than an unlisted or a private limited or a public unlisted company. This can be, this is actually a very sensitive topic. Whenever I've asked company, how do you win projects or private limited companies, they always tell me that it's a bit difficult as compared to a listed company because you're in the eyes of the public once you're listed. and they can always, check your financials, your structure, your board, and they don't need too much information from you because everything is available publicly. And then there's debt limit enhancement. You get favorable debt limit enhancements when you're actually listed. So these are a few benefits. I can go on, but just to, enumerate a few, this is what you get from a public listing. With that, I mean, not everything is rosy. Obviously, there's a cost of compliance attached with it, and one has to adhere to stringent compliance requirements, especially with regard to disclosure uh, of material information and product market governance. But that will only benefit you in the long run. I mean, being a compliant company can only benefit you. And let me tell you, whenever we do our top 25 companies award, compliance is the thing that separates these top 25 companies from the rest of the companies. So moving on, I'll tell you about the methods of offering shares through IPO. One is the fixed price method. Issuer sets a fixed price, offer price, which may be at par or at a premium to face value. And the offer price is based on valuation by the consultant to the issue, which is actually the lead manager or the book runner. Market demand and due diligence by the underwriters or pre-IPO investors. The issue is underwritten. It has to be underwritten by independent institutions, providing confidence to investors. And the basis justification of this is included in the prospectus. As I've told you, it's a disclosure-based prospectus, by behavior model, and investors subscribe at the preset price. Now, what is book building? Book building is basically an option. Whoever bids the most, gets the chair. So price is determined using the Dutch auction method. A floor price is set, whatever you feel like that, valuation, minimum valuation you should get for your company, you set that. And then there's a band of 40% at the moment, up to which a share price can go. For example, if you set the floor price as 10, you can go up to 14 rupees. And then bids are collected from institutional investors and high net worth individuals during the bidding period. A bidding book is displayed on TSX's website in descending order to show demand at various price levels. And the strike price is determined at the close of the bidding process based on the received bids. Shares are provisionally allotted at the strike price. Retail investors can subscribe at or below the strike price. Now, 75 in book building, whenever an IPO comes through the book building process, 75% is allocated to the high net worth individuals and the institutional investors, and 25% goes to the public. This actually is the preferred mode of fundraising for companies these days because they want to utilize the maximum price band. We've had previous two IPOs, which was Burkett Fusion, Daria, and BF Biosciences. All were successful book building IPOs, and they subscribed at the highest price, especially Burkett Fusion, which was oversubscribed by 16.2 times, which is actually unprecedented. So, that is the preferred method these days. Fixed price. I've seen REITs come at fixed price, but this time around we're also doing a REIT which is coming through the book building process. So moving on, what is the book building process? So, book building software is all done automatically. I mean, this is an automated process, and a designated institute which is PSX provides the software, book building software to the companies to facilitate transparent and efficient participation in the IPO. The system enables real-time bid submission, monitoring, and allocation, streamlining the price discovery process. See, so we give the system to the book runner, who is basically also the consultant to the issue, or the lead manager. We set up the system PSX. The book runner logs in. There is client registration, and there is client deposit, then there's bid placement, and then we run the allocation. There are book building results, and ultimately settlement and refund. Obviously, bidders who are unsuccessful are refunded their amounts. This, in a nutshell, is a process for the book. Investors, how can investors participate? It's very simple. Investors must register by submitting a completed registration form. There's a bit registration for, excuse me, form which is available with the book runners, and the investors must complete that form, and they should also, along with the margin money, a designated bid collection center. The book runner sets up the bid collection centers. A lot of other all brokers can participate in the book building process, but the book runner is the one who's actually responsible for running the book and placing the orders. So bid registration forms are filled, margin money is provided, payment can be made through pay order, demand draft, checks, not checks, but pay order, demand draft, or online transfer to the designated bank account. Once the registration is complete, investors receive a username and password via email to access the online bidding system. This can be done by the investor himself, or they can place the order with the book runner, who can place it on their behalf. And bids can be submitted online or in person at the bid collection centers using the bidding form. A confirmation email is sent once the bid is successfully entered into the system. Only, this is interesting, no downward revision is allowed, because this is a bidding process. You cannot, revise your bid downwards. You can only revise the bid up during the bidding process. See, because otherwise there is no point in having a bidding process. So this is actually in a nutshell what how investors can take part in the book building process. Now, once the book building is done, the shares are offered to the public, and for that, PSX has its eIPO system in place, which is very convenient, and you don't need to fill in the forms or applications physically. You can come online and register yourself and make the payment and subscribe the shares. It's convenient, it's paperless, it's time saving. There are a lot of things that can be, like if you have greater access, there are secure transactions, transparency, and faster processing. Obviously, since the world is moving towards electronic systems, so we felt the need to move towards it. And in 2021, we created our own system. The CDC system was available much before that. However, we thought that PSX being PSX, the exchange, we should also have our own system. So we made one too. And you can make payments through bank, microfinance bank, Jazz Cash, or anything. You can use it to make the payments to subscribe to shares. And then moving on, the other question that I was posed, in fact, given by PICG, was that how do we engage companies to list at PSX? So, I mean, obviously, there are consultant to the issues, but PSX has now started to actually delve into, we have a specific business development section, which goes out into the market to, meet up with potential issuers, to do roundtable conferences. We provide early advisory support. We directly engage with the stakeholders, the potential issuers that we feel. We do awareness sessions and outreach sessions, and we have published a listing guide to educate potential issuers. And all information is available within that listing guide. We have a dedicated listing support department which offers personalized guidance and hand-holding support to companies throughout the listing process. And we are always looking for ways to simplify the listing procedure, although it's it's a difficult proposition altogether to simplify the listing procedure, but we're still looking for, and from time to time we are making amendments. We're in fact in the process of making amendments to GEM board, and we are thinking about allowing public to invest into companies, startups, and high growth companies. So that is one thing, that is there. Other than that, we are trying to make the process simpler. We are making changes to the public offering, amendments to the public offering regulations, trying to ease the process so that companies can come in, without much hindrance. and obviously improved market infrastructure, enhancing digital platforms. Let me tell you that the process for reviewing the prospectus is all digital. We have our system which is actually called Pride, and it's all electronic. We do not encourage too much paper. It's all paperless, and it's a simultaneous review by SCCP and PSX. So that is one thing, that we take pride in, that we have made this process electronic. So EIPO, Pride, book building, all automated. This was long time coming, but it's here now, and it has provided a lot of ease to us as well in processing. So that's one thing. Uh, no paperwork involved now, because it used to take a lot of time for companies to complete the paperwork. Now all we need for companies aspiring to who aspire to get listed, to just upload the documents and we review them, and it's all electronic. And as far as the GEM board is concerned, we have started our outreach with the startups, because that is one section we need, we feel that has high growth potential. And obviously, every startup needs hand holding. And in this regard, as I was saying earlier, we have our GEM board. Although a lot of startups are at a nascent stage, but we feel that in a year or two, we will have a lot of interest in the GEM board. So since we're planning to open up the GEM board for the public. So that is one thing. Uh, we want to encourage, obviously, PSX plays an important part in the economy, and we want to encourage startups, technology company, medium-sized companies to come and raise capital through PSX rather than going through private equity or going to, VC firms. Why not use your very own local platform, national institution, to raise funds for the companies? So these are a few things that we do to sort of encourage companies to list. And then, I mean, there's obviously a lack of dearth of awareness, a lack of awareness, a serious lack of awareness when it comes to PSX, investing at PSX. So we have our investor education programs, through which we conduct regular webinars, seminars, training sessions on IPO processes and investment basics. We have our online learning portals, which are available on our website. We run awareness campaigns, and we obviously use the social media platforms, which is the favorite of the youngsters, because I think 60 more than 60% of our population is under 30. So, reaching out to them matters a lot. And for that, we just cannot, we can't use the conventional ways. So we have to use the social media platforms extensively. And obviously, then we collaborate with institutions, we partner with universities, banks, industry bodies to expand financing literacy. And we have our EIPO platform guidance step-by-step tutorial and helplines to assist investors in using the PSX EIPO system.